All right, what's up, guys? Chad with Advising Men here. Quick video for you. I've gotten a lot of requests, a lot of questions, because I'm in the construction and real estate industry. So I've gotten a lot of questions about the lumber prices. So I just wanted to explain to you really quick the history, what happened, where we're at right now, and where I think it's going. So back last year, when everything hit, everybody was sent home, people worked from home, blah, blah, blah. And so at that point, there was a run on lumber. People wanted to build their own decks, their own fences, wood rot and paint their house, whatever. So there was a run on treated lumber. There was a run on fencing, like 4x4 fence posts, 6x6 fence posts, all of the pickets. There was a run on all that. And so when that happened, there was a big pull on the inventory. And for that entire time, there's been a pull on the inventory. So what happened was that ended up, along with infection rates going up, that slowed the mills down, so they couldn't produce as much for a little while. They couldn't produce as much, and so that ran the inventory low all around the country. So at that point, and through this whole thing, I want you to think, follow the money, okay? Because I'm going to tell you at the end who's made all the money on this deal and who hasn't, and I think you're going to be surprised. So, run on materials. Everybody's doing their own decks, doing their own fences, whatever, and I know because at that time, I wasn't getting calls for it because nobody wanted to do that. They didn't want people in their home. I had a bunch of remodeling construction lined up, and when that hit, I lost it all because it was all interior. So I know for a fact people didn't want anyone in their home. So they were doing these projects themselves. So lumber inventory drops, and at that point, when people that watch the industry and people that trade the futures saw that number one, inventory was low, and number two, the mills weren't producing, or they were producing at lower rates because they had high infection rates. So people were staying home. And then three, the government starts giving them money to stay home. At that point, that froze everything up and just created this big backlog of supply and demand. So at that point, Mom and Pop are going to Home Depot and Lowe's, getting their material. They don't care. They bought it all up. They've got their fences, they've got their decks, they've got everything done they want to do. Okay? The builders, they're buying, they're still building. It didn't slow down a lot. They had houses they were building, so they were building. They were getting their packages from the lumber yards at normal prices. Then, once inventory was down, the futures traders, remember I said follow the money, the futures traders saw an opportunity because supply and demand dictates the majority of markets, and it 100% dominates the commodities market. Now commodities are like lumber, corn, soybeans, oil, anything like that. That's what's called a commodity, and it is traded on the CME. It's not traded on Wall Street, it's traded on the CME. So the supply goes down, lack of inventory. The futures traders go, oh, well, there's all this demand that's going to be coming and this low supply. So they're looking ahead and they're saying, oh, we could start bumping the futures price up. So they start bumping the futures price up. It goes to 800, goes to 900, goes to 1,000, goes to 15, all the way up past $1,800 per 1,000 board foot. Now, that is all on speculation. So what they do is they say, I think that today the price is here, and I'm going to bet that a month from now the price is going to be here. And if they are right, they make that spread. So they're sitting there going, oh, here's an opportunity. And they're pushing the futures price up. So as that futures price goes up, the wood that does come into the market, that retail price goes up. Because the lumber yards that are buying it on the futures price. They're not buying it at some preset retail price. That commodity goes up and down price-wise based on the futures market. So, all that time that the speculators speculating, okay, just speculating, and trying to bring speculation into the market, because when speculation comes into the market, the prices will be driven up because more people are coming into the market, more money is coming into the market. So the speculators drive the price up, which drives the wholesale price up, which in turn drives the retail price up. So that process starts and continues all the way till now. If you go into a Home Depot, a Lowe's, a lumberyard now, they're stacked with lumber. Okay, they've got all the lumber they need. They've got lumber out back. They're fine. No problem. But the prices are still high. So what everybody's asking me is, they're like, what's going on with the prices? Because they've got the inventory, the supply chain has been established again. It's not perfect yet, but it's been established again. They've got plenty of lumber. Why aren't the prices going down? Well, the prices aren't going down because the futures, the speculators, are trying to make as much money as they can before the price crashes. Now, we did have a crash. I believe it crashed from over 1,800 down to 1,200, and they stopped trading because they've got a circuit breaker rule where if it goes down a certain percentage, trading stops on that commodity. But prices are dropping, but it's not the retail price. So what you have to understand is, on the way up, the retail price was lagging behind the futures price. If the future was 900, you might get a 2x4x8 for $5.50, $6. And then the futures price went up to, say, 1,500. Well, then you're going to get that same stud for $7.50. See what I mean? The retail price lags the futures price. When you reverse that, it's the same exact thing. The retail price is going to lag the futures price. Here's why. The lumber yards bought all of that lumber at those high futures prices. So there is a body of lumber, a body of supply out there right now that the wholesaler purchased at that higher price. Now, the speculators made their money. They've filled their pockets already. They may be shortening on the way down to fill their pockets more. But the speculators have filled their pockets. Now, the wholesale market, they filled their pockets too, because they sold all that lumber at high price. The retailer hasn't filled their pockets yet. Why? Because all that lumber is sitting on their shelves at a high price. And the market, which is us, we're the people that buy the lumber. The market is saying, we aren't going to buy that lumber at that high price. So it's taking longer to move the high-priced inventory out of your Lowe's and Home Depots and lumber yards. All that high-priced lumber has to get moved out at that price, or maybe a little lower, so that those lumber yards also make their money, because if not, if they lower prices, they're going to get hurt. So here's how it works. The speculators have already made their money. The wholesalers have already made their money. Who gets stuck? The retailer gets stuck with the high-priced lumber. And guess who has to buy it all before they will lower the price? Us. So once again, we're the one that got screwed. The market makers are the ones that made the money. So the lesson here is, make money to invest money. You need to be an investor, not a retail buyer. Because if you understood how the markets worked, you could have made money too off of this type of thing. I didn't get into it because I got into other commodities when the downturn happened. So I have money in other commodities, other things that is growing fine, and I'm not worried about it. But if you want to know, if you're going to go in Home Depot tomorrow and go, why are these prices so high, blah, and start yelling at them, it's not their fault. It's literally not the retailer's fault. They bought the lumber from the wholesaler at a fixed price. They have to sell it at a fixed price to make a profit. The speculators are the one that drove all this up. Wall Street's the one that drove all this up. They made a bunch of money, and we're the ones stuck paying for it. And if you think that the mills and the loggers are making more money, they're not. The loggers get paid by the hour. They're making the same rate that they made to cut logs before all this mess. So they're not making more money. The mills aren't making more money. They're just processing it at the same rate, trying to get their production back up to where it was. And they're making the same amount to sell that board to a wholesaler. The entire time in the background, the speculators are jacking with the price because they know that they can make their money on the spreads up and down, and we're the ones that are going to get screwed in the end. So, thanks for listening, guys. I hope this helps you understand. Commodities all over. I mean, meat has gone up. Gas is up over 56% since last year. So these are all commodities. Oil, fuel, gas, any meat, chicken, pork, beef. I was listening to a beef producer. The cattlemen are getting completely hosed. Completely hosed. And the facility is the one making the money. So definitely try to eat local. Try to buy farm fresh, grass-fed meats from local farmers anytime you can. Buy eggs from local farmers anytime you can. Because the meat industry, the lumber industry, all the commodities, it's all, they're making money, and the people that are producing are suffering, and the retail buyer, which is us, are the ones that have to foot the bill. Thanks, guys. We'll see you next time. Appreciate it.